Ladies, women, girls or gals, let's have a chat, a serious chat. And if you are a man who's watching this video, as I'm sure there will be a few of you men, wonderful men who decide to click on this video, you are more than welcome to join and to stay. But I would really ask you to encourage a woman in your life that you love and that you cherish to share this video with them or any of my other videos about investing, because I really want to have a serious chat about this. The idea for this video came to my mind actually about 4 weeks ago. I woke up one morning and I literally wrote down, I don't always write down ideas for my videos. Sometimes it just kind of comes spur of the moment and I just naturally record. I literally, well, you can't really see, but I literally wrote so much that I wanted to get off my chest when it comes to women and investing and why there is such a lack of us in this space. So if you have been on my channel for a while, then you know that I talk about, anything to do with my journey to financial independence. I like sharing my journey, and a big part of that journey is investing, which is so important. It's one of those things that seem very scary to a lot of people, seemed very scary to myself not that long ago, and it creates this fear in people that, well, that's not something that I do. That's not something that somebody like me does. So I'm not gonna do investing. It sounds risky. It sounds like I'm gonna lose all my money, and I get it because I've been there and I've done that. But the reality is, investing is one of the only ways to build long-term wealth. It's one of the best ways to hedge yourself against inflation, and I may explain that a bit more later. And I do talk about that in other videos on my channel. But essentially, investing is essential. And that is not the message that we receive when it comes to finances. We see investing as optional, but I'm really starting to see more and more that it is actually essential if we want to stay above water when it comes to our finances. So on my YouTube channel, very interestingly, I look at my YouTube statistics, and my YouTube statistics tell me that 75% of people watching my channel are men, and about 25% of people watching my channel are women. Now, that's quite crazy considering I am a woman talking on YouTube, so you would think I would have a larger female audience. I don't tailor my videos to men or women in particular. This is the first video where I'm actually targeting it at women specifically, but I generally don't do that. So you would think there would be a 50-50 split, or at least 60-40 to women, but that's not the case. And it wasn't until I spoke to some of my other YouTube friends who talk more about saving and budgeting, and they don't really delve into the investing side of things, I realized that their audience is predominantly females versus males. And we realized that the reason why most of the people who watch my videos are men is because I talk about investing. So again, this just highlights the problem that we have. Women are either not accessing this information, they don't really know where to look. I don't know, but this is why I'm asking you men to share it with the ladies in your life. The other thing that I have found is there are a lack of women on YouTube talking about investing. There's not that many of us on the grand scheme of things. When you look at how many people on YouTube are talking about investing, it is largely driven by men. The fact that I'm a woman, I'm kind of an anomaly. The fact that I'm a black woman, I mean, yeah, that's a whole nother situation. But yeah, there's not many of us, and this is a big part of why I do what I do, because I want to put myself out there as a woman who's investing, who isn't a millionaire, who isn't working in the financial services industry, who's literally done her own research. And I'm hoping that, seeing me, watching my journey, watching my portfolio updates is just going to encourage you as a woman to realize I can do this too. Believe me, if I can do it, you can absolutely do it as well. Now, interestingly, I want to touch on a few things as to why we have an issue when it comes to women and investing. So there was no women were working at the London Stock Exchange until 1973, which is not that long ago. And that was 172 years after the London Stock Exchange opened. Like, I can't believe that. For 172 years, it was in business, and there were no women working within the London Stock Exchange. So that shows you really the state of what we're dealing with here. The next really interesting thing that I found is that the Sexual Discrimination Act to prohibit banks refusing women to get mortgages without a male only came about in 1975, guys. Like, some of you watching this channel would have been born in 1975, and for me, I was born in 92, so that was only 2 decades before I was born, and women couldn't even get a mortgage by themselves. And I'm just saying all this to kind of set the scene as to why things are the way. I know why things are the way they are. I know we've got a long way to go. I know we've had to catch up in comparison to men. But honestly, we are in one of the greatest times in history for women. And, we're still fighting, we're still pushing, but we have so much more rights and freedom now than we ever did before, and it's only going to get better. Investing now is so easy for anybody to do. You can get invested with as little as £1 on some platforms like Trading 212, for instance, which I know they're closed right now, but the barrier to entry is so low now that investing is really accessible to everyone. We no longer have to worry about going to events to learn about investing if we don't want to. We can sit in the comfort of our homes, watch people on YouTube like myself, read books in the comfort of our homes, listen to podcasts, whatever else we want to do. We have that ability now. We have that freedom, and we have to use it because nobody is going to teach us these things. We know it's not going to happen through the education system, and as much as we can cry about it, we kind of just need to get on with it. We know that most of the times these conversations do not happen in the home. So if they're not happening in school and they're not happening in the home and they're not really happening on reality TV or anything like that, what people are watching on TV, then we have to take it into our own hands. And we need to figure out what it is that we need to do to get started investing. So just to give you a bit of context for me, as I said, I was talking about podcasts and books and everything else. For me personally, how did I get into it? So I got into understanding or learning about investing through Our Rich Journey. So they are a American couple who were able to retire by the age of 40, and they moved to Portugal with their 2 daughters, and they shared their story essentially on YouTube. This was the first time that I realized the concept of financial independence. Never heard of it. Never understood how it worked. I just assumed you had to come into a large amount of money through an inheritance or something. I didn't realize you could put money aside and invest it and let that build and compound over time. I had no idea. So that's where it started. And then I just went down like a rabbit hole, essentially. And I just found Mama Furfa, which I was so happy to find because it was a woman in the UK who was talking about investing, and I was like, oh my gosh, wow, they exist, this is incredible. And then I started to read books. I've done a video about the books that I've read and that I would recommend. I started to listen to podcasts. I started to do research online, read articles. I use the Vanguard website because they have good information on their own website. And I started to realize that it's not rocket science when it comes to investing. Now, I'm not going to necessarily break down the nitty gritty with investing in this video because it's already going to be a long video, and I have lots of other videos about that. So check the description box below because I will link those videos so you can definitely check those out. I do investing for beginners. Like, I talk from the very basics. If that's where you're at, I've got videos for it. But there are also lots of other people on YouTube. There are lots of books, lots of articles, lots of podcasts. And it took me about 3 months after I started that journey and I watched the first Our Rich Journey video. It took me about 3 months to the point where I actually started investing. It didn't need to take me that long, to be honest. I kind of prolonged it. I could have done it within a month, but it took me 3 months and I was like, right, I'm ready for this. I need to get started. There's no time like the present. I need to just get into the stock market. I'm going to be doing this for the next minimum 10, 15, 20 years. So I need to start now, sooner rather than later. One of the most important things in investing is to leave it over a long period of time, to give your investments time to grow and compound and let that interest that you earn interest. And, in the UK, we are so fortunate that we have so many tax efficient wrappers, which I also talk about in other videos. So investing is just super simple for us in the UK. Like, we have accounts which allow us to invest, and, our investments can grow not interest free, tax free. you know, we're very fortunate. So we need to make use of that. And that's how I started, just by self-education. I never reached out to a financial advisor. I don't ever intend on reaching out to a financial advisor unless my financial circumstances become a bit more tricky. Then I'll be open to it. But I don't need to do that right now for where I'm at. Now, for those of you who are watching this and, you know, you're still you're at the stage where you're scared about investing, I want to talk about when you realize that investing is not that scary. I want to touch on a few points with you guys just to kind of reassure you and get your creative brain juices going and thinking, actually, maybe I really need to look into this and take this seriously. So the first really important thing to realize about investing is that investing is much more about psychology than it is about a science. And what I mean by that is investing is very much about our behavior, our psychology, what we do, than it is, you know, reading charts or like fully understanding every company you invest in. We are fortunate to have things such as index funds and ETFs, so we don't really need to know the nitty-gritty details of every single company we're going to invest in. We don't need to. That is the reality. If you're individual stock picking, well, that's another story. When you are investing, you will realize that your stocks will go up and down like a yo-yo. And that is the nature of investing. You can't escape that. But when you're taking a long-term approach to investing, generally speaking, from historical data, the stock market does go up over time. So if you look over a month or 2 months or 3 months or even a year, it may look like the stock market is not doing much. But when you pull out and you look over 5 years, 10 years, 15 years, 20 years, you see, oh, wow, the stock market has really gone up in that period of time. Now, the key is with investing to not panic, to not listen to hypes, to not check your investments too often, and to just leave it, just to automate it, just to, you know, say, right, this is the amount I can invest every single month, whether that's £10, £100, £1,000, £10,000. That would be a lot every month, but whatever it is for you, know that you're going to invest that no matter what the stock market is saying, no matter what those TikTokers are talking rubbish about. Just automate it. Just know that you're going to invest, whether it's up or whether it's down. You know, unfortunately, a lot of people sell in a panic. When they see that the stock market is crashing, they sell their investments and they sell it at a loss. And the thing is with investing, you haven't gained or lost any money until you've crystallized it, until you've sold it. So even though you may look at your portfolio and it says up by 20% or down by 20%, for instance, it's not recognized, it's not realized because you've not sold it. Invest in psychology. It is key, guys. It is so, so important. Second point is when you understand that keeping your money in your current account or in a regular savings account is a fool's game because inflation is making that money worth less and less. I saw something on Instagram the other day and I did repost it because I thought this is so important. You're taking a pay cut, essentially. That's how you have to view it. You know, I've just read a BBC News article today that inflation is 5.1%. That is crazy. But what that means is, you know, most goods and services will have gone up by about 5% in their price, in the cost of them, which means what you could buy it for last year or the year before, you can no longer buy it for next year. And so if you're making the same money and your money's in a savings account, and you know you're getting 0.1% interest, you've actually lost money because your purchasing power has been reduced. So this is why investing is so important. We have to keep up or go ahead of inflation. That's ideally we want to go ahead of inflation, but at bare minimum we want to keep up. Now, is there any savings account that will return 5% to us? The answer is no. We know that's a no. That's not possible. So, you know, if you keep your money in a savings account or a current account, you're losing money. That is just the long and short of it. So again, this is why it's essential. The third point is investing is not as scary when you are able to set yourself up well financially before you start investing. And what I mean by that is if you have an emergency fund that, you know, you have available in a savings account. So it's not about earning interest on an emergency fund. It's really just about having that cash accessible. When you know you've got that emergency fund, you don't need to withdraw your investments if you need to find cash for an emergency. Because you already have an emergency fund, you can just tap into that. This is why people lose. This is where you can lose at investing. If you're selling in a panic, if you're selling to fund an emergency. So once you set yourself up right, and you've set yourself up so that if something was to happen, you've got cash to access, you don't need to worry about your investments, because you know you can leave them in there for 5, 10, 15, 20 years and you're still going to be fine. The other thing is, if you've got high interest debt and you're paying 19% interest on your debt, for instance, on a credit card, that's generally what they are, then it doesn't make sense to be investing, because your investment returns most likely won't outpace the interest that you're paying on your debt. So, you know, this comes into the setting yourself up right. It's having an emergency fund. It's getting rid of your debt. Or if you can't get rid of it fully and you're like working your way, because I started investing before I got rid of all of my debt. If that's what you're doing, that's totally fine. But make sure that the debt that you have is either a very, very low interest, like below 3%, or 0% interest. So I got everything over to a 0% interest credit card, like a balance transfer. I wasn't paying interest on that, but I was also investing. So yeah, you need to make sure that if you do have debt, you're not paying more towards the interest of the debt than you're receiving in returns for your investments, because that doesn't really make sense. The fourth thing, when you realize that investing really isn't scary, is when you realize that you're already doing it through your pension. Now, I've realized more and more that a lot of people don't realize that the money that they have with in their pension through their employer is invested. That is how it grows so large over the years. It's not just the contributions that you and your employer put in. It's the fact that they invest your money. So you are already an investor if you have a pension. And the reason why they invest pensions is because, again, this is how you build wealth. The fifth point that I want to touch on is it's not so scary when you realize that this investing is a wealthy man's sport. Like, this is what the wealthy do to keep their wealth, to keep growing their wealth. Like, this is what they do. This is how they build wealth. They do it through investing. They do it through real estate. This is it. It's not, there's no secret. There's no secret sauce. There's no secret to success. This is it. This is what they do. And, you know, we're obviously going to do it on a much smaller scale, where they may have millions to invest. We may only have a couple of £100 to invest, which is totally fine. But it's not really about that. It's about the principles behind it. And the last point that I want to touch on is the fact that investing doesn't seem so scary once you understand how to mitigate the risks. Risk is such an important word when it comes to investing, because we all have very different risk tolerance. Now, there's always going to be risk when it comes to investing. You know, it's not risk free. You don't take risk, you won't get rewards. Everything is risky. If you really look at it on a certain level, everything is risky. Driving to work, there's a risk you may crash. Buying a house, there's a risk you may fall into lots of issues with your house, or your house is going to depreciate in value. Taking a holiday, there's a risk when you get on that flight that plane may not make it. Like, this all seems a bit bleak, but my point is there's a risk with anything in life where there's a potential reward. And it's important to realize that. But with investing, you can, maybe mitigate is not the right word, but you can manage risk. You can definitely manage risk. And one of the ways to do that is through diversification. So not putting all your eggs in one basket, making sure that you do things to diversify your portfolio. You may do this through investing in index funds. Index funds are by nature diversified. They generally include hundreds of companies, so they are diversified by nature, and this is why I'm a big fan of index funds and ETFs. But it may be for you that you don't just invest in stocks. You invest in stocks, you invest in some commodities like gold and silver, whatever else. You may also invest in fine art and things that really appreciate in value over time. You may decide that you want to have real estate and rental properties, whatever it is. You may decide to diversify like that, but the key is to diversify, whether that's through how you invest, or whether that is also through, you know, investing in different asset classes. That's up to you. But doing that means you're not putting your eggs all in one basket. Now, that has been a very, very long video. I just needed to get this off my chest almost. And I hope that you've enjoyed this video. As I said, I've got lots of videos on my channel about investing. Check the description down below if you want to check out my investment playlist, or you want to look at my portfolios, or whatever that you want to do. If you are new here, I really hope you've enjoyed this video, even though it's been a long one. Let me know below in the comments. And yeah, I'm going to end it here. Thank you so much for watching, and I look forward to seeing you in the next video real soon.